Beautiful. Okay, so quick question. Before we go into today's class, did anybody take some time to go check the chart and see if they could identify double tops or double bottoms or both from the chart? Like Mr. OJ said in yesterday's session, the aim is not just for us to be engaging you in activity. You know, we just gather you for 1 hour a day. That is not our prize to come and say, hey, this is what we're doing. We have a bunch of people that are bringing together and we speak to them on a daily basis, right? The aim is to ensure that we are imparting knowledge. And if you are involved in the activity and you do not go back to check out or test what it is that you're learning, you will realize that it is just a matter of time before the new information you've acquired just slip away. So give me a second to set up a trade. I've been monitoring a trade. I'm not confident enough to share it with the entire team because it is quite risky. You know what? Let us see how it goes. Let us see how it goes. I'm going to drop a trade for everyone now. So you know what? Everybody, prepare your MT5 or MT4, whichever you're using. We are going to take a trade right away. Let me get capital values and then I'll share my screen and we will be taking this trade right away. I think this is going to be cool. I mean, if we lose it, we lose it. Okay, so this is what I'm going to do. I'm going to share my screen. Let me share this. If you can see my screen, if you can see my screen, please drop a 2 in chat box. Let me know you can see my screen. If you can't see my screen, drop a 0 in the chat box. When I say my screen, I'm talking about my chat.
Okay, Vera responded, she can see my screen. Before I responded, you can see my screen. All right, so I want to show you what I'm looking at on GBP card, right? And price is getting to our area of interest, our point of interest. So I think in a minute we'll be ready to take this trade. Okay, so let me show you guys. Okay, you may not understand the entirety of what I'm looking at, but I'm expecting price to get into this zone that I have marked out with the orange rectangle. So we're going to enter with stop loss right above this high, and we would expect to take price down to this point. And if we look, I'm on the 5 minutes. I mean, the top down analysis has already been done. Price has, you know, done a number of things in time past. We have seen a strongly bearish trend. So far, we see a W pattern here that failed, you know, and then kept going. We saw other blocks that kept on getting tested. This tested is other block, and price is reacting beautifully to that. That is on 1 hour time frame. We are going lower to the 15 minutes. We are seeing price pushing back up into that zone. So very quickly, I want us to calculate our risk. I want us to risk just $50 on this trade. So this is a 20.7 pip stop loss. I'm going to copy my entry from here, paste it here. So I want to risk $50, right? And I'm risking 100% of that amount. And the stop loss is 20.7. And this is the pair, this is the entry price. And I'm going to calculate. So we're going to use 0.378. So everyone go to your MT5 and enter these values. We are entering a sell limit on GBP card. I don't know why that is such a tongue twister for me. Sell limit at this price, stop loss at this price. I'm going to be dropping this in the chat box. So maybe for those of you who would want to copy it. So let me put it in the chat box. GBP card. Sell limit at that price. Let me see where the stop loss is. Let me see where the stop loss is. Stop loss is going to be way up here. And I'm putting that way up there to be safe. So you'd see that anybody who is not on this call right now is going to miss out on this trade. And we are going to target a 1 to 2. This trade has potential to do way more. It has the potential to do way more, but we're going to target just a 1 to 2. So we'll be taking our profit. This is a 1 to 2. We're taking our profit, right at this low, right here. Right? 1 to 2. This trade is going to go all the way down. My people, we are not going to do 1 to 2 on this trade. We're going to hold it all the way down to this point. Right here. Worst case scenario, we can close here. Another thing we can do is take partials somewhere here. We can take partials somewhere here and allow the rest to run. And I think today is going to be the day that I'll show everyone how to take partials. So this is the lot size we are using, 0.37. 0.37 GBP card, my God. And this is looking to be a strong high. We have liquidity being grabbed here and structure being broken to the downside. This is looking like the top of our range. Yeah, this is looking like the top of our range. So yeah, we're expecting the price to come into the zone. Let me know if you have set that up, everybody. So we're entering with 0.37 lot size on GBP card, and then we are going to set our TP right here. So let me put everything in one place and post it again. Let me, where is the stop loss? Oh, wait. Sorry, if I hang on, that take profit is wrong. That take profit is wrong. This is the right take profit. So that one I sent there was the stop loss, not the take profit. So I'm putting this right here. Let me confirm the values again. Entry 56512, 56719, C. 56512, 56719, CP is 55748. Have that here, 578, and the lot size is 0.37. Good. So this is what we are working with. Okay, this is zone, not Did everybody catch this? If you are in, drop a yes in the chat box. If you have set up the trade, drop a yes in the chat box. Let me know you have set up the trade. Okay, Emeka set up the trade. That's good. That's fast. So don't forget, sell limit, not market execution. We are not entering at the current price. We are setting it because we are waiting for price to come up here. And I would see these as, liquidity being built up to feed into our point of interest. Ideally, my stop loss should be around this high, but again, I'm weary of some of these equal highs that we have right here. So just to be safe, that's why we're putting our stop loss, right up there. Right, so we're good. Just in case price wants to throw a week above there to clear people who have their stop losses there. Now, just a few things to prepare your mind, and this is part of our training, guys. So there are a number of things that happens in the market, a lot of the times, and one of the many things that can happen is this: you can set a trade like this. You have seen a beautiful trade. Okay, let me show everybody's in. We have 1, 2, 3, 4, 5, 6, 7 people who are already in the trade. How many are we on call? Hey, we are way more than 7. Who else has not set this up? Now, Vivian, Atam Michael, if you are just coming in, we are looking at a trade that we are going to take. This is GBP card. I don't know who else is just coming in. This is GBP card. Check the chat box. The information has been put there for every one of you to follow. Okay, Vivian has set hers up. Ata Michael, have you set yours up? I think you just came to the meeting while we were. I'm just going to paste it one more time just for your sake. So GBP card, that is the sell limits, stop loss, TP, lot size, all of that. So just set that up, right? So I was explaining something to you guys that a number of things can happen. And one is your your sell limit never gets triggered. That is scenario one. You set up a trade and your sell limit never gets triggered. Price could possibly come very close. Like I've seen, I've had many cases where price, did stuff like this, came close to my entry and then kept going down from there. Those kind of moments can be very painful. You'll feel like crying. But hey, one of the things that you would, want to get used to in the market is, these things happen a lot. It doesn't stop your profit on the next trade. So just go ahead and chill and wait for the next setup to come. Right now, there is something that is called FOMO, and I've explained to everybody on the call before: fear of missing out. Fear of missing out. Now, for instance, we already know that our directional bias for GBP card from a higher time frame perspective is bearishness. Like, right, we're expecting a lot more bearishness on GBP card, especially because we have a lot of imbalance right here in this region that we're expecting to get filled on GBP card. So we are expecting price to push downward, right? Now, one of the things that usually happens to most traders, which is the thing that kills them the most, is that in a lot of times when they get to the chart, maybe they're looking at the lower time frame, maybe like 3-minute time frame, and they are seeing stuff like this. They are seeing stuff like this. Price is already pushing downward. It came up again and it's pushing downward and pushing downward. The next thing they begin to panic is, price is leaving me behind. I had initially set my entry up here and price is not coming back up to trigger it. What is happening? Price is going down. And what they begin to do is they begin to look for entries here, and the next thing you know is price will probably push in their direction a little bit. And then maybe they entered here, set their stop loss somewhere here. Price pushes in the direction a little bit and then goes back up to tap into the original POI that we're looking at. By this time, they have been taken out. Price has already hit their stop loss and they have made a loss on the trade. And then they will probably come here. They're already doubting themselves at this point because they thought price was going down from here. Price took them out at this point, and then price is now in the original point of interest. And because, for price to get back up here, you'll be seeing a lot of green candles. You will now start doubting, am I looking at the right POI or is price trying to buy now because price has broken above the space I was looking at before? Then they enter for a buy right here. Stop loss wherever they usually place their stuff. The next thing you know is because the original intention of price was to tap into this POI and come down, they have entered for a buy, they would eventually get stopped out, right? So you see a lot of people forcing trades in the market. They are trying to push the trade upward, push the trade downward, and all of that. The best approach to market or trading is to be calm. Do your analysis, trust your analysis, and leave it. Let it play out. Today, I took a trade. Another reason why I did not send it to the group was I was not sure about the setup. And that is one of the things that I kind of broke my trading rules on today. When I'm not sure about a setup, best thing I do is I stay out of the trade. I leave the market. I just allow things be, right? But I saw the trade. A number of people confirmed what I was looking at, and I was like, okay, I'm not sure about it, but let me just go along with it, right? And because I know that all of us in the LumiPel cohort are trying to meet a target, I would only share the best setups with the team. And that was why I did not, share any of it with anyone on the call. On the group today. And I'm even glad I did not share that because, I entered at the wrong point. Price was at my POI. Price pushed downward. I now had a lower entry. Let's not go into all of that detail. Then price began to push back upward, push downward, was consolidating anyhow. And eventually, like a few minutes into the London session, suddenly picked up in volatility and began to push to the upside, went against me. And I was like, oh, this is what I was talking about. I would have just stayed out of this trade in the first place. So we have a strong high right up here. We have a strong low right here. We see liquidity being taken out, and we see structure being broken. So we are in our small range. Let us see what price will do. We'll probably come up, grab some internal liquidity, tap into this POI and continue down. Let us see. However, this plays out. If it works in our favor, all fine and good. If it doesn't, all fine and good. We only raised $50 in the trade. Okay, so let us get into our activity for today. Yes, Monday, that was our first class where we began to discuss double tops and double bottoms. Okay, this is our stream. And we talked about a number of interesting things, and I was hoping that a number of people on the call would be able to go back to test those things. But apparently nobody went back to test those things. So we'll just do a recap on some of the things we discussed in our previous class, and then we'll try to build on those things and move a step further. We'll go into the charts and try to look for examples, a number of scenarios where some of these things played out, right? Look, I keep saying again that one of the biggest advantage for me, I don't know about other Forex traders, but one of the biggest advantage about the Forex environment for me is that everything I learn, I can almost immediately go and backtest it. Backtesting is the most interesting part of Forex learning for me, backtesting. The fact that when I get fresh information, I can go back to my chart and try to confirm for myself if it is true or not. It is a big deal for me. Now, what am I saying? For instance, the first time I heard about support and resistance, what did I do? I went to the chart to check. Is this really true? And I would see, charts truly begin to respond to certain regions. It became obvious to me almost immediately that there were certain regions on the charts that price would get to and reverse. The same applied for support, right? Look, I've acquired a number of skills over the years in line with the things that I'm interested in, but a number of them require time to actually see the results or the outcome of what you are practicing, right? For instance, let me not get too much into that gist, but you already understand what you're talking about. Okay, China says she's backtested and also spotted a triple bottom, but not sure of the currency. She thinks it's USD. All right, that's cool. That's cool. I like that feedback, right? I like that feedback. Look, let our group be active. Don't be afraid to post stuff in the group, right? In as much as we're trying to keep the group serious, when you spot something beautiful, for instance, after a class where we talk about double top and double bottom, and you go your chat and you see it, if it excites you, go ahead and share it in the group. Hey, that this is actually real. I have seen this happen a number of times on the chat. You can drop your own screenshot. Look at this double top pattern that I saw right here, and look at how it played out. This is really good to see, right? There are a lot of other interesting concepts that we will get into. But remember that everything we are trying to do, everything we are showing you, all the chart patterns, candlestick patterns, and all of that, the aim of it is to enable you come up with a complete system that you can use to set up your own trading strategy. Are you understand what I'm talking about? A complete system, so that eventually, when you want to set up your own style of trading, we will show you our own style of trading, but when we want to when you want to set up your own style of trading, your own trading system, your own trading plan, you have already been equipped with all the necessary information that is required for you to set your plan up and make it work right? So we are going from every aspect, from the background to the basics to the terminologies to the reason behind it, the trades we are taking and all of that. For instance, the trade we just took now, if you paid attention, I wasn't exactly trying to check for indicators of support and resistance or chart patterns and all that. There were a number of other metrics that I was looking at to confirm this trade. But if we check, you would realize that a number of the things that we have learned in the past actually feed into some of the things that we are using as metrics to take this trade. right? Some of those things actually feed into it, but let's not overflog that. So we talked about double top, double bottom. We are going to just do a little bit of that and then begin to check out triple tops and triple bottoms as well. Yeah. GBPUSD is a really good pair, and you can understand why GBPUSD is one of my favorite pairs to trade. I can show you something very quickly on my chart, and this is something that I will just put at this point to encourage you to do. Right. So if you see on my chart, I have right here my favorite pairs that I trade. My favorite pairs. Look, I named them my favorites right up there, and I only have 3 pairs: AUD/USD, GBP/USD, XAU/USD. XAU/USD is gold, right? Now, when I come to the charts every day, these are the only 3 pairs. These are my go-to pairs. First thing I do, I open 3 tabs. First tab, AUD/USD, second tab, GBP/USD, third tab, gold, and I check these 3. Now, this fourth one here is DXY. DXY is basically the dollar index, right? It is basically, now the dollar index is not a currency of its own. It is a kind of metric or something that computes the performance of the dollar across different currencies. So it is checking what is happening on the dollar, on dollar-based currency pairs like USD CAD, USD CHF, USD anything, right? And then it is checking the performance of currencies that have the dollar as their quote currency. Remember we've talked about base currency and quote currency before, right? So when you have a pair like USD CAD, USD in that case is the base currency, and when we have a pair like Euro USD, USD in that case is the quote currency. We've dealt with all of that in the past, so I don't want to overflow that. So for pairs, let me just take a minute to explain that. Let me not run through it too much and assume you understand, because I feel like I do that a lot, right? Because it's already in my head, but let me just take a minute to explain. Okay, so we have our class for today, but I want to use this opportunity, since we just discussed it, to just digress a little bit, teach you that, because it is actually not in our curriculum per se, right? But since we are on the topic, let me just use that opportunity to run you through. I think it's going to pay you a lot in the future. Okay, I just typed something. Finish doing shakara. All right, DXY. So let us pick a pair like USD CAD, right? So USD CAD, and then we have another pair, and this one is going to be Euro USD. Now we have USD CAD and we have Euro USD, and we have dealt with this in the past. Just that I want to just bring it up again to refresh your mind. Now in this case, USD here is the base currency. Base currency. So we have the first currency here. This combination is the combination of 2 currencies, the US dollar and the Canadian dollar, right? This is the Canadian dollar. So we have US dollar and we have the Canadian dollar. And the same applies here. This is Euro, and this is also the US dollar. Now, in this case, at every point in time on every currency, we always have a combination of 2 things. Now we have, where is my text tool? We always have the base currency, which is this guy, and we always have the quote currency. The quote currency. So CAD here, the Canadian dollar here is the quote currency. The base currency here is the US dollar. The same thing also applies here. We have Euro being the base currency here, and we have the US dollar being the quote currency here. So I was trying to use this opportunity to explain DXY, right? Now, base and quote currency, is anybody still confused? Do you understand what it means now? Do you understand? If you understand, please type a Y in the chat box, Y for yes. If you don't understand, type an N for no. Quickly, let us move on. Okay, yes. Everybody understands that. Now, let me just quickly give a simple deeper explanation to what I just talked about. Base currency, code currency, what the heck does that mean, right? I mean, those are just terminologies. Now, when you have a base currency and you have a code currency, it means you are using the code currency to buy the base currency. And you can go check this out, right? You can go confirm this for yourself on Investopedia. You can just go to Investopedia and search base currency or code currency, and you'll see the complete explanation. We are using this currency to buy this currency. On Euro USD, we are using the US dollar to buy the euro. And so if the price of Euro USD, for example, is, okay, let me check AUD USD. We are around 0.7 something or 0.6 something, right? Let me see on GBP card, for example. This is, we are around 1.56 something. So let me just change this to GBP card and then use that as an explanation. So we are around, again, 1.56. So let's say this is the current price of GBP card. It means that you will need 1.56 Canadian dollars to buy 1 GBP, 1 pound. Do you understand? 1 English pound. You would need 1 Canadian dollar to buy 1 pound, right? And the same applies for USD card. I don't know what the price is for USD card at the moment. Let me try to maybe open another chart and check what the current price is for USD card. I don't trade USD card. I mean, there used to be a time I used to trade as many pairs as possible, but not in recent times. It's looking like we're going to end up using our entire class to explain this. USD card, and you load quickly. The chart is taking a while to load. 1.29-ish, that is the range. That is the area where USD card is around right now. So USD card 1.29.
First for the guy and the ball first.
Someone
The battery na 300. Give me share.
All right. So it means that in this case, you need 1.29 Canadian dollars to buy 1 US dollar, right? So if the price of this is going up, it means you're going to need more Canadian dollar to buy 1 US dollar. If we are having lower prices, it means you need less Canadian dollar to buy 1 US dollar. I'm not going to go too deep into all of that explanation. I'm just going to direct you to go to Investopedia, type in base currency, type in code currency, read up the definitions and try to understand what those things mean. And I'm even hoping I've not mixed them up because it's been a while since I've read or studied any of this stuff. I just basically, apply them to my trading. Okay, so what I wanted to explain to you basically was the relationship between DXY and currency pairs, not just all currency pairs, but particularly USD currency pairs. So I'd explained that we have our base currency and we have our code currency. Now, and in that example, what I put here was Euro USD. And so the DXY basically gives us the performance of the dollar against other currencies, right? The DXY is the dollar index. So let me go to DXY. Don't overcomplicate your trading with stuff like this at this point in time, right? It's nothing to be concerned about. So one of the things that we can see happen on the DXY, I mean, one of the things that we can observe, and I would even dare you to go back test it on your own, and I'm going to open a lot more charts. Probably this will even take significant energy. So let me go to maybe like 30 minutes or 1 hour. The network is quite slow today. So the DXY is directly proportional to currency pairs that have USD as their base currency. I know I said that fast, but I'm going to take it slow and say it again, and then I'll explain. The DXY is directly proportional to currency pairs that have USD as their base currency. When I say directional, directly proportional, or directly correlated, rather, correlation is the word I'm looking for. Correlated, DXY is directly correlated, and don't worry, I will discuss currency pair correlation much later. It's not anything too advanced, but currency pair correlation basically refers to the relationship between currency pairs and how they act. So if I tell you that Euro USD is positively correlated to GBP USD, it means that they move in the same direction most of the time. And that was not a random example. Euro USD, GBP USD, AUD USD, they are positively correlated. And so if we go to the chart and check, you will realize that when AUD USD is trending upward, you can expect that GBP USD will be trending upward. Should we check it? Let us check it. So let me see that. That becomes funny because I have both of them on my favorite list. So let me go to the current. So look at this now. This is AUD USD, this one. In fact, let me put the watermark. Where is that setting? So you can be seeing the currency in the background. Yeah. So when I switch to AUD USD, you can know I'm on AUD USD. Actually, that should apply here, but I need to refresh the page. So let me just take my. Okay, so I said that AUD USD and GBP USD are directly correlated, right? So let me open Euro USD on this one as well. They're positively correlated. So we are all on the 30 minutes time frame. So this is GBP USD. Look at what we have from this point to this point. You can see that we have a clear upward movement, right? This is on GBP USD. Let us check AUD USD. You can see that we have a clear upward movement. This is on the, okay, this was where 15 minutes. AUD USD is also 15 minutes. They are moving in the same direction. Euro USD on the 15 minutes, let me see. Now, because two pairs are directly correlated does not mean that they'll be doing the exact same thing. That when one is buying, the other one must be buying at the exact same time, right? But we can still see that same significant move happening here, just that Euro USD is acting differently. Now, the fact that they are positively correlated, I mean, each currency pair may have the same direction, but they have subtle nuances in their behavior, right? For instance, we can already see a retracement and then a push up on this point. On AUD, okay, we are seeing the exact same thing happen here. I mean, their own correlation is a lot stronger, I think, when compared to what we have on Euro USD, right? So that is about currency pair correlation. And I can tell you that a pair like AUD USD or GBP USD is inversely correlated to a pair like USD CAD. USD CAD. USD CAD has the dollar as its base currency. And 15-minute time frame. Oh, this is even moving in the same direction. Let me see it much higher time frame. So look at it now. On the 30 minutes, you can see this massive. Let me go to the 30 minutes here as well. So on the 30 minutes on USD CAD, you can see that we have a massive push to the upside, very massive push to the upside on USD CAD. On GBP USD, what are we seeing? We have the opposite of that. We have a massive push to the downside, right? Those pairs, these two pairs are inversely correlated. I mean, they are not directly correlated, they're inversely correlated. On AUD USD as well, you can see that we have a massive push to the downside. Whereas on USD CAD, we have a massive push to the upside. They are inversely correlated. So there are a bunch of pairs that have relationships with each other like that, right? But that is not for you to bother your neck about right now. So, but why this is important to know is because many times, new traders. So let's just check where we are. Okay, price is still dancing up and down. Let's just allow price to what it wants to do. So many traders. I mean, I used to fall prey of this when I started trading Forex at first, right? So if a pair is inversely correlated to another pair, you cannot just many traders cancel out themselves on the trades that they take on multiple pairs, for example. So if on USD CAD, and USD CAD is oppositely or inversely correlated to GBP CAD, you are now taking a buy on USD CAD on GBP for example, expecting price to go up, and then you come to USD CAD and you are taking a buy as well. And you're taking a buy as well from here and you're expecting price to go up. What will most likely happen is by the time you are in profit on GBP USD, you would most likely be running at a loss on USD CAD because USD CAD will be going the opposite direction, right? Because it is inversely correlated. So when GBP USD is going up, USD CAD will be coming down. When USD CAD is coming down, GBP USD will be going up. I mean, the opposite applies to both of them. That is on one hand. On the other hand, when you are trading to currencies that are positively correlated, like GBP USD and AED USD, you would have to be careful because what can happen is that when you make a mistake in your analysis on one of the currencies, you would most likely be wrong on the other one. For example, on AED USD, if I'm looking to take a buy on AED USD, first of all, it means I'm not going to be taking a buy on GBP USD because I'm betting twice, right? It means if my directional bias is wrong and I'm taking a buy on both GBP USD and AED USD, since they're both directly correlated, I will be taking losses on both of those trades at the same time, right? So what I do is if I take a buy on GBP USD, I don't take the same buy on AED USD, right? One other thing I do or I use to my advantage is there are times when maybe I've done my analysis and I've seen that these pairs are supposed to rise, but the entry is not clear for me on GBP USD. What I can do is I'll come and check AED USD if the entry is clearer. There are times when I will get a clear entry for a buy on AED USD and I will not get a clear entry for a buy on GBP USD, right? So once I get a clear entry like that, I can go ahead and take my trade, right? So I was saying that for pairs that are directly correlated, when you take a trade on one, you don't want to take on the other because if you're wrong on one, you'll be wrong on both. And then for pairs that are inversely correlated, you don't want to be taking double bets against yourself. So you are taking a buy on both, and the one is going up, the other one is coming down. So even if you're in profit on one, the other one will be canceling out the profit that you're already making, right? Unless you want to gamble in the market, only gamblers will be doing stuff like that, right? The way we are teaching you to trade is to trade with precision. And that was why it was important for us to bring that up. So that's a little bit about currency correlation. I think I'm going to have to rename this class. So just focus on correlation because we basically use a lot of time to discuss that. Okay. So back to where we were. I was talking about the relationship between DXY and dollar pairs. There is also the JXY, which is the Japanese currency index. But I don't really look at the Japanese because I don't really trade JPY pairs. There was a time I used to really enjoy trading them, like USD JPY, AED JPY, GBP JPY, but not as much anymore. So the DXY is directly correlated to currencies that have the dollar as their base currency, right? The DXY is directly correlated to currencies that have the dollar as their base currency. And then on the other hand, the DXY is inversely correlated to currencies that have the dollar as their quote currency. So at this point, I think you already understand what direct correlation and inverse correlation means, right? So when I say direct correlation, it means they move in the same direction, and inverse correlation means they move in opposite directions. So let me give you an example. Let us open the DXY on this chart. So we are on 30 minutes, and sorry, I'm moving my picture up, and I don't know if it's moving on the screen as well. So we are seeing that we have a huge period of bullishness here, right? On DXY. The DXY, look at it, it's showing this is the US dollar currency index, US dollar currency index. And we are seeing this period of bullishness here. And I said that it is directly correlated to pairs that have USD as their base currency. And for USD CAD has USD as its base currency. And you can see that within this period that the DXY was bullish, USD CAD became bearish, right? Now, the extension of the bullishness is going to differ across all currencies. It's not going to be the exact same thing. Let us check USD CHF to see if that also applies. And what can we expect? Because, directly correlated, not inversely correlated. When DXY is bullish, this one too is being bullish as well because it is moving in line the DXY. The DXY is a little bearish, just a short period, and we can see that same reaction happening on this pair as well. Now, since the DXY is bullish here, we can expect that currency pairs that have the dollar as their quote currency. When I say quote currency, don't forget this is what we're talking about. They have the dollar last, so it could be XXX USD, so Euro USD, NZD USD, AED USD, GBP USD, all of them. They have USD at the end, right? For pairs that have USD at the end, that is as the quote currency, when the DXY is bullish, you can expect them to be bearish. And the extension of that bearishness, we cannot exactly determine, but we can expect that we'll see a drop. But this will even apply a lot more on the higher time frame. So let me go like the 1 hour. And we can see that for an extended period on the 1 hour time frame, we can see price being bullish. And I go to AED USD and we switch to the 1 hour time frame right here. And you can see that also for an extended period, we could see price being bearish, right? Because it is inversely correlated to this. But on USD CHF on the 1 hour, you will see that just like we have on the DXY, because the DXY is directly related to the to pairs like USD CHF and USD CAD, you will also see heavy periods of bullishness like this. Let us go back and check this on USD CAD to confirm this. You would see that on USD CAD as well, on the 1 hour, we have this extended period of bullishness, which is also in line with what we are seeing on the DXY, right? So currency pair correlation basically has to do with that relationship between different currencies. And my God, we have ended up spending our entire time talking about currency pair correlation instead of us to focus on what we have to discuss on double tops and double bottoms, right? But I'm really glad that we got the chance to communicate this, because like I said, it was actually not even infused into our curriculum. It was just part of those things that, you know, we know as traders and usually act upon. And I'm glad that we've gotten the chance to discuss it in today's class. So I'm just going to give a minute for anyone who understands, or I mean, who has any question or whatsoever concerning what we just talked about on currency pair correlation, before we just look at double tops and double bottoms just a little more, and then we'll call it a day. Anyone? Questions? Anyone? Okay, Iberi is asking, does that mean we can take a buy on all positively correlated USD pairs at the same time and get a somewhat similar outcome? Yes. Okay, I already answered that. Yes. So we can actually, like I said, you can actually be expecting to take a buy on AUD/USD and GBP/USD, but I do not recommend it. I do not recommend it. And the reason I do not recommend it is because if you are wrong in your analysis on one, it means you're going to be wrong on all, because all of them are most likely moving in the same direction. They may not move at the same time, but you can expect that they will most likely be moving in the same direction. So you could have one moving 30 pips to the upside, and then the other one is crawling behind, maybe moving 10, 15 pips to the upside, but you can most likely expect that they move in the same direction. But again, since they're the same currencies and they move in the same direction, you don't want to be betting twice on stuff like that, because if you're wrong on one, you'll be wrong on both. The same applies if you're trading inversely correlated pairs. You don't want to be taking trades against yourself, right? So if you're taking a buy on one and the other one is inversely correlated, you should be expecting to take a sell. But what I even prefer to do is, if I'm trading pairs that are inversely correlated, if I take a buy on one, I don't even bother taking a sell on the other one, because again, if I am wrong on my buy, it means I'll most likely be wrong on my sell on the other one. So when I take a position, I just let it run. I don't try to over. So what I can do, I think the best I've had in recent times is to take a trade on GBP/USD and gold. GBP/USD is not directly correlated to gold. It's not inversely correlated to gold. They move at random. They're not moving at tandem to each other. They move on their own, right? So I'm not expecting huge relationships or correlation between GBP/USD and XAU/USD. Although we can have certain factors affect both of them in the market. For instance, if we are going to have a high impact news on USD, we can expect to see huge reactions on both GBP/USD and XAU/USD. But it doesn't mean they will move the same direction, because they have USD in their makeup. They will both react to news, high impact news that have to do with the US dollar, right? So I think that basically answers the question. Is there any other question? Do you have any other question? Does anyone have something to say? You can go ahead and raise your hand in the chat box. I mean, raise your hand using the reaction tool on Zoom. Or if everybody understands, please drop a 5 in the chat box and let us get back to our chat and look at more examples. Do a little back testing on double tops and double bottoms, and we will call it a day. Okay, I'm seeing 5. Five. Everybody understands what we've spoken about so far. So let us get back to the chat. And what we'll be doing right away would be to check out examples of what we've been talking about. So I'm going to go to AUSD and 15-minute time frame. I'm going to see if we can spot places where we had examples of double tops and double bottoms. Now, before we get into that, let me just use the opportunity to quickly, we're going to do that in 5 minutes and we'll be done. We're done with class. So let me just put this aside. Let's go somewhere fresh. So remember that I've told you guys before, I think I can even do that here. I've told you guys before that you can, most times when we show you examples, you get to see picture perfect stuff. For instance, if I'm showing you a W pattern, I'll be showing you stuff like this, right? This is what you'll be seeing. Now, these examples are given for learning purpose, right? If I'm showing you an M pattern, you'll be seeing something as clear as this, right? These examples are given for learning purpose. In reality, when you get to your chart, what you will most likely be seeing, hang on a second. Where is that tool? The tool that I wanted to use. Can't find it. I think it's called the Ghost Candle tool, something like that. Anyways, what you most likely be seeing would be for a W pattern. You will see the chart making higher highs and higher lows. You know, maybe something like this, right? It is your sense of understanding what the chart is trying to do that will enable you spot that this is a W pattern formation, right? The same applies for your M pattern and all the other chart patterns that we'll be discussing. So I just wanted to put that out there so that you don't get confused when I start saying we have an M pattern and a W pattern here, right? So for someone who is just looking at the chart, now another thing I need to add is this, that your pattern formation should be in line with your other analysis, right? So I will not just come to the chart and say, I'm seeing an M pattern here, it means price is going to fall. For example, someone will come to the chart right now and say, it looks like we are having an M pattern forming here, and then I'm going to expect price to fall all the way down. That is not all you need, to make an informed decision. You need a number of things, and that is why we are showing you all of these things. We've shown you the indicators, we've shown you charts, we are showing you chart patterns now. You are understanding what trends are. This, of course, is at the moment forming some form of bullish trend, which is quite clear. I believe everyone can see that. So you can see that at the moment we already have, from the point of origin, we have a touch right here. We have another touch here, another touch here, and perhaps we want to see how price will react to this trend line. Maybe this is coming to just test it and touch it and bounce back up. You need to see all of that confirmation. So you cannot just see the chart and just say, okay, I'm seeing an M pattern. Let me just go ahead and take a trade, right? And now, this is where we begin to talk about confluences. Remember that I told you something when we're talking about all of these M patterns, that you have something called the neckline, right? The neckline. And many times there are people who take confirmation entries upon the break and retest of the neckline. So they will wait for price to get out and retest this neckline before they take it. Now, a confluence in this example simply makes sense. So let us even assume that we are seeing our chart pattern form right here, which is our M pattern or the double top. Now, it is not an exactly perfect double top. This one is slightly higher than this other one. It's totally fine. But all the same, this could be what we'll be expecting. But then you realize that we have this region right here that is forming our neckline. Sorry, this is, yeah. So we have that region right here where we have this rectangular listing. So let me just make our trend line a bit faint, right? So this area right here, this orange rectangle is forming our neckline. Price is approaching it. So we are seeing confluences. Number one confluence is that we have a trend line. Price is moving upward. And on a normal, without the M pattern or whatever neckline, we will be watching out to see a break. I mean, we're watching to see how price will respond to this trend line. If price is going to hold on the trend line or if price is going to break. We test and then continue pushing downward. That's number one. Now, number two, we now have our M pattern to combine with that as well, right? So I'm seeing that the neckline of this M pattern is rhyming with our trend line. So if price breaks the trend line, I'll be watching to see, okay, we still have our M pattern, our neckline in this region. Let me see how price, because this could be acting, this entire region could be acting as a support to that, to this price movement, right? It's acting as a support. So if price breaks below this and is unable to break back above, so when price breaks and closes below this, that could be a confirmation that, price is going to continue pushing to the downside, right? So these are just two confluences, right? By the time we begin to go into other things like, okay, let us check, for example, what our RSI is saying. Okay, our RSI is telling us something interesting. Now, remember that we talked about something, an interesting concept called divergence, right? You can see that up here, our RSI is showing us that, our chart is showing us that we have a higher high. Let me make this other one faint so that we can see that one. Our candles are showing us that we have a higher high. This high right here is not as high as this one. This one is obviously higher. But look at what we have on our indicator. Our indicator is giving us a divergence. So this is confirmation 3, right? Telling us that, hey, it looks like price is giving every indication to push to the downside. So we have our M pattern, we have our trend line, which is about price is coming to the point where we'll most likely be expecting to see a break. We have our RSI divergence. Let us even see if we get to use our MACD. Let us see if we'll see anything from there. Okay, let us see. So we have our high and higher high here, and let's see the high that correlates with this. We have this high here, and we also have the same divergence happening. Okay, no, not here. I'm active on it. We have the same divergence happening here. So this high is what correlates with this part of the chart, and then we have this high correlating with this. So we also have the same divergence showing on the MACD. That is confluence 4, but I wouldn't even count that as confluence 4 because the MACD will basically give you the same divergence as the RSI in the first place. So let us not bother ourselves to look at that. So we have a bunch of confluences already. What other confluence can I use? Let me see. Let us use our moving average. Okay, and so we have. Let me change the values of these moving averages. I'm going to make this red, and I'm going to change this period. So let us use our 50 and or 20 and 10. So this is going to be the 20-day moving average, and then the blue is going to be the 10-day moving average. Can you pop up? For some reason, this is very sharp for me. Let me close this other chart. Perhaps they're consuming significant energy. GBP card is not coming back to our entry. No problem. Let's leave it there. Let us know when to cancel or delete that order. Where were we? Yeah, we were here. We're trying to open our moving average. Okay, this is not coming up for me to set. Let me quickly refresh the page. Now, this thing we're doing right now is basically for educational purposes. I do not decorate my charts like this with so much indicators and all that, right? I like to keep my charts as clean as possible. I tell the indicators, guys, don't confuse me. I want to see price action clearly. So I usually don't, do all of this. But for the sake of combining everything we have learned so far, I want us to do this. So let us make our 20-day moving average that thick. And then let us see our 9-day moving average. This is not responding for some reason, maybe because I already have too much indicator right here. So we have seen divergence 1 to see on the RSI. I'm going to close that and try this one more time. It's not coming up. I'm going to leave that. So, but I want to believe that you can see the blue line. Let me make this white, just a bit too white, so you can see it, right? So we can see that already price is below the 20-day moving average. It's already below this red line. Remember, we talked about the moving average crossover, right? We can see that price is already below this red line, and we're on the 15-minute time frame. So we're expecting to wait to see if this candlestick is going to close below. If price closes below this 20-day moving average, and then we begin to see this blue signal line cross below the 20-day moving average as well, we can expect that price is going to continue falling from here, right? So these are basically confluences. These are a number of things based on what we have learned before, and you can see that it is making sense now on the chart. As I'm, if I now send a trade idea to the group by tomorrow that we are selling AUD/USD, you are not confused. You're not at a loss. You're not like, okay, why are we even selling AUD/USD? You already have an idea right now why we are selling AUD/USD, right? One of the things that I want us to begin to do soon enough, I mean, even right away, is when a trade idea is sent to the group, on your own, open your chart and try to understand what is this person seeing that he's saying, let us sell now. What is he seeing that he's saying, let us buy now, right? Try to figure it out on your own. If you're unable to figure it out, you can put a message across. Now, okay, I checked the chart. I saw this pattern. I saw the end pattern. I saw my moving average crossover, or I saw my RSI. I saw whatever confirmation. Are these the things that you saw that enabled you make the decision to take this trade for a buy or for a sell, right? And if those are the conferences I was looking at, I'll let you know. Otherwise, I'll also let you know. No, those are not the parameters I was looking at. This is what I was looking at, and this is why I went for the sell instead. So what I was saying earlier, price is pushing back up. So we would want to see price close below this red line for us to be sure that we're expecting a sell. And we're even in 15 minutes time frame. We would probably even want to see a better confirmation on the day. Now, remember I said that higher time frames give us better, we have a preference for higher time frames because our bias is a lot stronger. Our analysis is a lot more correct or highly probable when we are paying attention to higher time frame analysis. Now, if we were to be fixated on the 15-minute time frame, we'll be expecting to take this sell for a long sell, right? But possibly price will only just sell to this point, to this area we have marked, which is the neckline of that M pattern, which is acting as a support, and then begin to buy again. Because if you go to the 1 hour time frame, you now realize that price is still heavily bullish. Price is still far away from the red line, although it looks like it's approaching, but we have the blue line above the red, the blue signal line above the red. So everything is pointing upwards. So we can still expect price to keep pushing in the upward direction. But let us not overcomplicate stuff, right? And this is what I keep talking about not, complicating things, because already now you're on the 15-minute time frame seeing a sell, you're on the 1 hour time frame seeing a buy. What do you do? The question is, what kind of trader are you? Are you a scalper? Are you an intraday trader? Are you intending to hold this trade for a few days? If you are intending to hold the trade for a few days, you now know that already you are not going to move with your 15-minute bias, because your 15-minute bias is going to be a short sell. Do you understand? The 15-minute bias is going to be a short sell. We are probably going to be selling from this point to maybe somewhere here, something like that. Okay, that was white, so you just see it. From this point to somewhere here, something like that. But on the 1 hour time frame, we are expecting to see more bullishness. So if you want to hold this trade for a longer period of time, you will most likely be waiting for price to come to a discounted region or a lower region. I'll explain what I mean by discounted and premium much later. You're waiting for price to come a little lower. You will take your buy and follow price up with more bullishness. Right now, there are probably a number of people who are looking at this chart on the 1 minute time frame and are taking buys and sells, getting in and out. Just enter, catch a few pips, maybe 5 or 10 pips, get out. Enter, catch a few pips, get out. Right? I don't have time for scalping anymore. I used to do it back then. This was fun. But right now, I do a lot more intraday trading in the morning, much before, shortly after the Asian session, before the London session. I look for a beautiful entry or a beautiful setup and take around the London session open. That London session gives me enough volatility for price to move quickly away from my entry and into my take profit. And the same happens as well for the New York session or something similar happens for the New York session. Okay, so let us get back to what we were doing. Our time is already well invested. I'll just show us a few things and we are out. So first things first, do not forget, we always give preference to our higher time frame. Okay, but let us continue. Already right here, we can see that we have a nice triple bottom formation. Triple bottom, look at it. Leg 1, leg 2, leg 3, and then price pushed up massively to the upside. Are you seeing that? And then talking about conferences again, that rhymed perfectly because it formed around our trend line. So we have our trend line forming, and then we came over to a lower time frame, and we are seeing this triple bottom formation. It is a clear indication that price was about to move to the upside. So if I were the one looking at this chart at this point, this is a 3-minute time frame, by the way. Don't forget that we are giving preference to the higher time frame. So I would have come to my 1 hour time frame because I'm an intraday trader. So I did a lot more with 15 minutes, 1 hour, 4 hour time frame, right? So I'd have come to my higher time frame and drawn my trend line. Even from 15 minutes, I can draw my trend line because I've gotten enough touches right here to draw a trend line. And then I'm looking at lower time frames for confirmations. So I use the lower time frame for confirmations and entries. So there are times I can be looking at the 5 minutes, the 3 minutes. Sometimes I even go as low as 1 minute, depending on how precise I want to take my entry, right? And so I've seen the first leg from here, the second leg from here, and the third leg from here. And then this third leg was the one that touched my trend line, right? Remember that when we draw a trend line, we don't expect to cut the real body. But this is the lower time frame. When you have time for like 15 minutes, this is going to be a week, right? So when I begin to see some bullishness around here, like this green candle pushing up, I can already take my entry from that point, put my stop loss below here, and set my take profit right at this high. I'm not expecting to catch the entire move. I'll just set my take profit at this high right here. And already this is a 1 to 3.8. So it means if I risk $100 on this trade, I'll be making about $385 on this trade. This 3.85, this to reward, right? So these are some basic concepts that a person can use to take entries. So let us go again, right? Let us go again. Remember, we're on the 3-minute time frame earlier because we are on a much smaller time frame. Now, I mean, we are doing intraday trading. Probably we can even use this for some scalping, right? This does not give a very clear price action, but we can still use it. It fits our scenario and fits into our purpose for today's class. So you can see right here, price went up, came down, and even on the small time frame, remember I keep talking about the fractality of price, right? And I say price is fractal in nature, and this is basically what it means. So let me replay price back here, and I will even go to an even smaller time frame. I'm going to the 1-minute time frame so you can see it clearly. And you see that even on the 1-minute time frame, price is doing the same thing and is confirming our movement. So we have our trend line already drawn on the higher time frame. Remember, you are always going to draw your trend line on the higher time frame. We have drawn our trend line on the higher time frame. We are coming down to the smaller time frame. I mean, at this point for you guys, don't bother about going to 1-minute time frame. I just don't get confused because there's a lot of noise. Over time, when we are spending a lot of time in the chart, you'll be able to filter through the noise to now know when to take your entries and exits. But for now, don't even bother yourself about the 1-minute time frame. But I'm using it for educational purpose to show you that what is happening in the big time frame. We had seen that triple bottom on the 15-minute time frame and the 5-minute time frame. We are even coming down to the 1-minute time frame, and I'm telling you that even on the 1-minute time frame, you can see those chart patterns still forming as well. All right, so we see price fall all the way down here. Let me make this a little thicker so you can see it clearly. So we can see price forming. Price came here, first leg, second leg, third leg, and then boom, price kept going up, right? So what I would do is, at this point, I've seen the first leg form, second leg form, and then I'm seeing some signs of bullishness here. What do? I go long, set my stop loss above this low, and I target somewhere around this high. I can choose to target the real body of this candle right here, right? When I say the real body, remember we talked about candles before. So if you have your full candle like this, and you have your wick on this side and your wick on this side, I mean, you already know what the wick is. This part right here, where you have the color, this is the real body of the candle, right? I believe that is clear. So it's not, we've taken one of our classes back to talk about it. So I can use my, the real body right here as my target. And look at this, this is already a 1 to 4. Meaning, I mean, if I'm trading the smaller time frames, okay, that's all just messed up. If I'm trading the smaller time frame, I will not be expecting to be risking high amounts of money. I can't tell you if I risk $100, I'll make $400, because if I was on a 1 minute time frame, I would not be risking $100. I'll be risking maybe less. So let's even assume that I risk $20 on this trade. It means I'm going to be making over $80 on this trade as well, right? So let us see. I think price went up to look at that straight up into our TP. So price has already tapped us into our profits and even went further. But this is just to go ahead to tell you that what we see happening on the higher time frame can always be seen to be happening on the lower time frames as well. So remember that you are not taking your chart pattern in isolation. You are taking your chart pattern in, as an additional confluence to what the trend is already telling you. Now look at this. So at this point, now this is not very clear again because we're in lower time frame, and let us not force it. So I'm never going to use that example. What I wanted to say was that we kept on seeing this bullish move, and then we could see price giving us a kind of formation somewhere up here, but that is not exactly what is the case. But notice that we began to see a lot of weak rejections. See, weak, candlestick, weak, all of them throwing long wicks right here, right? This is an indication that, hey, price is in a region right now where they are experiencing high rejections, right? These are called candlestick rejections. You are seeing all of them 3 weeks, week right here. So for someone who wants to take an aggressive entry, let us see if we can see another confirmation. Oh, beautiful. If you take price back here, you will also see that price came here and reversed aggressively before. If you take price back here, you will see that price had come here in the past and rejected from here. So we have a good resistance area right there. Look at that resistance area formed. I mean, this part, we had huge momentum, to the downside. So it didn't bother, just broke through, came back to retest, failed, went down, and now price has come again and was giving us all those weeks, right? So for someone who was observing price, when price was around that portion, yeah, right here, we're playing price. Look, we're already just a few minutes, and we're done. Oh, we're done. Right? So, and then you begin to see these bearish candles forming. So you have seen rejection. You have already marked up your resistance area. You have seen the bearish candle forming. What do? You pick your short, this thing, take a position from here, put your stop loss right above this higher, maybe just a little bit above. Look, we're even down to like 7.8 pips stop loss, which is a good thing. And you can set your target right at this low, right here. Right? This is already a 1 to 2.6. 1 to 2.6. So if you're risking maybe $20 or $40 on this trade, you will already be making either $40 or $80 on this trade as profit as well. But you can even know, because we are basically seeing this in hindsight, you can even see that price went ahead to do a lot more. So price came back into that area, and then let's see. So at this point, you'll probably be holding a drawdown. I mean, just a little bit, the price just danced and then went on to, let's see, the network is not working with us as speedily as I expect. But we can see price shooting all the way to our take profit beautifully. And you can see that already we have hit our take profit, and our take profit also coincides with the trend line, right? So you can already see practically here that we are applying what we have learned. You are seeing that your knowledge of trend line is not a waste, right? We took an entry from here and sold it back to the trend line, right? And this is a classic example of someone who is able to, even take a counter trend trade. Remember, I told you guys that even if price, sorry, I drew that wrongly. Let me just draw it again. That even if price is bullish, we will have periods of bearishness within that price movement, because price never just moves in a straight line. So if you know what you are doing and you are trained enough, you can still catch even a sell within a buy. So all of these retracements, I know a bunch of people who trade only retracements because that is what they're good at, right? I personally prefer at this point in time to move with the trend. I don't go against the trend, right? So even if I see this classic sell trade setup, I would rather wait to go with the trend. And here is why. It is because price is bullish. Price can surprise you at any point in time. Price could have been coming down here and from this point not touch the trend line. Price could have just started going from there. So you just see that you took an entry, price respected your entry just for a little bit. Price did not get your TP, and then from here, price continued going up. Because in the first place, price was trying to go up, right? In this case, it worked in our favor. So it is most recommended that you work with the trend. You trade pro-trend, meaning you are trading in the same direction as the trend. So if the market is buying, you should be looking for buy opportunities, you should be going long. If the market is selling, you should be looking for sell opportunities, you should be going short, right? So those are the basic concepts, right? There are other concepts that we will even begin to talk about in the future, like hedging and netting and all of that, right? So you will see that someone can actually, in the grand scheme of things, maybe on the larger time frame, he has taken a buy position right here. He's holding that buy position. But even while holding the buy position, he's taking small sell scalps, right? He will just scalp a sell. He's still holding the buy, but even in that small movement, he's taking several counter trend trades. There are other people. There's something else called scaling in. Scaling in is, okay, I've taken a buy position right here. I'm expecting price to go up. When price, moves like this and comes back to this trend line, I see my confirmation. I add another buy position again, right? And still take it up. And price goes up. Let that load just a little bit. Price goes up to the upside, comes down again. I see my confirmation. I still take another buy position, following price to the upside, right? That is why you can see a chart where a person's buy on one currency is plenty. You just see GBP/USD buy, right? That is basically what happens. A person can take multiple positions, can keep scaling it over and over and over and over again, because you will always get multiple opportunities like that. Okay, enough said. I believe that we have been able to cover a lot in today's class. We're able to look at practical scenarios for the double top, double bottoms, triple top, triple bottoms. I would still like us to do just a little bit of this in our next class. Now, but I think the most important thing that we're able to flog on was currency pair correlation. We talked about the basic currency, code currency, and how certain currencies are correlated with one another. I think one last thing that I can just show you if you are interested in studying currency pair correlation is my FX book. So my FX book, they have a number of tools that are very useful. So I have that bookmarked because once in a while, when I want to take, maybe for example, I find a really good trade on a pair that I don't really trade, I usually check, is this pair correlated with another currency pair that I intend to trade? Now, this is my FX book. They have a correlation filter. So based on their metrics and how they have set up this page, I can search for just currencies that are either correlated 80% above or correlated 80% below. Now, a pair that is strongly correlated would have a value that is 80% and above. For example, let us look at this, right? Let us just focus on the charts. If you see Euro USD, and let me even go to a more make sense example like the price we just looked at. So we have AUD USD here. I don't know if you can see these values properly. Okay, it's not zooming in for some reason. But let me see if I can do that here. Okay, beautiful. I can do that here. Okay, I believe you can see the charts right now. So you can see that we have, it has distorted a number of things. It has distorted a number of things. So let me just leave it the way it was, right? So you can see that right here from the chart, we have Euro USD and AUD USD. See AUD USD. 92.4% correlation to Euro USD. It means these two pairs are strongly correlated. See AUD USD and GBP USD. 95.0% correlation. 95.0% correlation. Now, these pairs are strongly correlated. See this first one, AUD/USD and AUD CAD, 94.0% correlation, positive correlation. It means they will most likely move in the same direction. But now look at this, minus, now remember that based on what they have described here, correlation ranges from -0 to +0, where minus 100, sorry, minus 100 to plus 100, where minus 100 represents currencies moving in opposite directions and plus 100 represents currencies moving in the same direction, right? So if we have currencies that are moving, I mean, for instance, we were on AUD/USD and we saw one that was, where is it? Minus 91.2%. It means Euro AUD is inversely correlated to, or negatively correlated to AUD/USD. So when AUD/USD is going up, Euro AUD will be going down. So let us look at that, for example. So we're on the 15-minute time frame. Let's go to like the 1 hour on AUD/USD, and then let us check out. EP card is just doing its own. Let us go to Euro AUD. And switch to the 1 hour. And you can see that the exact same thing that we just saw is happening here. So we have this period of bullishness on AUD/USD on the 1 hour, and we can see a conversely negatively proportional period of bearishness on Euro/USD, Euro AUD, because they are negatively correlated. And what else can you see for me right here? I can see a clear triple top formation right here. And look at that massive push to the downside. Triple top formation right up there, and we have that massive push to the downside. So we'll keep seeing stuff like this happen over and over and over again in the markets, right? But I'm glad we're able to study currency pair correlation. Now, one of the things that I would like to point out just before we close this class is that currency pair correlation kind of, I mean, I've not backtested that part enough, but I want to mention it to you so that perhaps you can study it. They change per time. These values are not set in stone. They change per time, right? So if you see time frame over the course of 1 day, some of these pairs, like over the course of, I mean, if I look at the day time frame, you see that, or maybe on anything less than the day time frame, we'll see that these pairs like AUD/USD and GPs are strongly correlated. But if you want to start checking correlation like 1 week, 1 month, especially if you are the swing or position trader, you would be seeing different values, right? So AUD/USD on the 1 week time frame is not as correlated as it is when we're looking at time frames that are less than the daily time frame. All right, that is it for this class. Let us call it a day. We have spent a lot more than we had budgeted for the class, but I'm very sure that it was worth it. And I appreciate every one of you for staying on the call. I want to believe that the call was as interesting for you as it was for me, because we always have a great time on our call. Thank you guys. So I'm not going to open the floor anymore for questions because we have already spent much time on this call. If you have any questions, feel free to drop on the WhatsApp group. All right, thank you very much. I'm getting that feedback, and I really appreciate you guys. So Shanae says it was very interesting, and Doris says it was very interesting as well. Thank you guys. So I look forward to having our next class being as interesting as this one, or even more. And I think what makes it interesting for me is that everything we are saying, it's not audio explanation. We can open the chat and we can see it. I love that about Forex, right? I can open the chart and I can see it, right? You tell me that this pattern works like this. Open the chart, show it to me, right? So go ahead, backtest everything that I've been discussing in today's class. I look forward to seeing you guys on Friday. But for tomorrow, we'll be having human capacity development. Don't forget to study or go back on some things that we discussed in the previous class so that you are able to interact and comprehend what we discussed in tomorrow's class. All right, for everyone, it is bye for now. We'll see you on Friday. Enjoy the rest of the day. Cheers, and I'm out.